BIGtv. Brought to you by Infront. GoInfront.com.
So we are here. It is now time for Fill or Kill. As you can see here, I'm sitting here with a black screen behind me. We are gonna be 3 or 4 people today, but we have done a pre-recording today. So our show will be broken down into a talk with Sebastian Galli, a little bit about the Swissy, the difference between a trader and a strategist, and also how you can use analogs, which is what is Ed's forte. So we're gonna go ahead and play that clip. So we are ready to tune in for that clip now, and I hope you enjoy this conversation with Sebastian.
Trader is more busy, of course, with the high frequency business. So we kind of complement each other in the sense that a trader is far more knowledgeable about liquidity, about markets, about a and an understanding of the microstructure and the other participants in the market.
Yeah.
The strategy typically is a little bit more on the economics side, a little bit more lost in the clouds, but not too badly. It's not an economist. And generally there's a very strong complementary as a transition between a trader who's also partly a strategist and strategist is a little bit of a trader, but the two complement each other very well.
Do you think it's what do you think is the hardest? Is it to find long-term like trends, long-term views, or is it harder to implement trades? It's such a different sort of set of skills you need for this.
Are you asking Sebastian or me?
Well, both.
I would. My personal perception is that it's both are equally very difficult. They're really different skills. So the difference is if you look at medium-term or breaks of regime, what you're essentially looking at is the breakdown in the normal pattern of trading. That's the anticipation of it. When you're in trading, you're basically trying to maximize an existing regime or bet that you will see that breakdown. So to maximize within the existing regime or existing, if you want, rules of trading, you do it well and you understand it very well, how it operates, but eventually you think that that process will change. And the process of changing is one where a strategist typically has a bit of an added advantage because he will look at sets of surprises which you might anticipate, some longer term themes which suddenly come in. For example, the fact that if you imagine that Norway was a very expensive currency, very few people paid attention until last year. And then, the strategist's job is to say, look, this is just bloody expensive. I don't understand it. It's just not normal. There's something really wrong in Norway. And eventually that at one point filters through in actual trading. And of course, the reaction from the central bank, which it happily kind of pushed the currency lower. So where we have some added value on the longer term. The implementation of the trade, I would never try to implement a trade talking to a trader. Get more in. We have no really great understanding about what's happening in the flow business, how people are positioned, and just simply it's not our business.
Yeah. And what do you think? I mean, same question for Ed. I mean, how do you, because you have been sort of on both sides.
Yeah, I'm coming from a completely different place. I agree kind of with everything Sebastian says, and then I not disagree. I would say he's got 30% of the entirety, because it comes down to how you define trading, and as a trader. There, it seems you were referring to a trader as being someone who's more reactive, someone who's anticipatory. Jesse Livermore referred to as trader or speculator, someone who anticipates rather than reacts. And for me, I anticipate all the time. I rarely react. So maybe that means I'm not a trader. But how do you define a trader? I'm a swing trader, position trader. I'm a positioner. I'm an investor. I take risk. I look at the markets, look at the opportunities, and trade what I call trade accordingly. Whereas I think Sebastian is talking about probably some of the guys who work at SocGen on the desk. They are traders because they are reacting more. So I think it's probably just a difference in terminology than anything else. How you, I would argue that it's much easier for someone like Sebastian to do his job well if he has an understanding of trading. But from the few words he says, I can see that he does.
And
It's a
I
bit
think
like
that's
asking,
what's so good about Sebastian, because I get all these alerts and I follow him on Twitter. I read his reports, and he stands out as a very, very sort of proactive individual. He thinks like a trader. It's very clear, and I like that about, because you can actually trade on his recommendations.
yeah. I mean, it's an understanding. I mean, it's like Taleb. You know, Taleb is forever tweeting skin in the game.
Yeah.
You need skin in the game to appreciate it, to understand it. Well, fine. But if you've got no skin left, then you can't really even exist. So, you know, sorry, I don't want to go too morbid. You're the one who likes morbid stuff. So it's important to have an appreciation. Can Catholic priests advise people on marriage? Yeah, I mean, in some ways they can from afar. Not, I want to bring the French angle in again, but yeah, they can. They can do it neutrally. In some ways, they bring something better to the game. In other senses, it's not that funny.
That's actually pretty great to think of a strategist as a priest.
Yeah, but that's the problem is if you're a strategist on the sell side versus the buy side. So when I was on the buy side, we would implement a trade, but it was be sent to a execution team to do that part of the business. And when you are on the side, you are not allowed in any way, shape, or form to implement a trade or trade on your behalf, or have basically any correlation between what you say in your business and actually what you can do in terms of a P&L for very, very good reason. So the skin in the game does not exist. And if it does exist, it's actually completely illegal. That restricts us by definition. But you try to act as would be on the buy side, and that's what we always try to do, because ultimately that's what they care about.
So if you look at specific trades, is there anything, you may briefly mention the euro before, is it anything that particularly interests you right now? Sebastian?
Sure. Yeah. The euro is very interesting. One is difficult to make money out of it. There's been basically gigantic carry trade going into the European periphery, buying the bonds over there, buying non-core bonds and trying to pick up yield. This is enhanced by the fact that there are very few safe assets left in the world, and that they've changed the regulations that mean people need safe assets, and they will find them in the Eurozone. You can see that the corollary of this is in the Swiss franc, whereby the market is very small. And you'll have, let's say, Russian banks and maybe even a Ukrainian bank trying to pick up some Swiss franc because it needs a balance sheet, because it knows that in a very risk-off scenario in emerging markets, it will actually bring its credit risk by holding Swiss assets, either because of the credit, or simply because the Swiss franc could appreciate. So we see franc do very well, particularly the euro, and coming ever closer to the 120 level, whereby the SNB would be forced to intervene. It makes the life of the very difficult. From a trading perspective, is that Euro Swiss is a tendency to set very low levels. If you at the more medium story, in the case of the Swiss, you can imagine what's going to happen in the 3 to 4 quarters down the road. You're going to have interest rates rising in the U.S. Have a Euro Swiss, which is not really currency, but the Swiss dollar, which really is the currency. And at that point in time, carry trade from the Swiss franc into the dollar. So the downward pressure that we've seen in Euro Swiss will eventually reverse, because the Swiss franc will eventually come under pressure relative to the dollar, and that probably will take a few quarters. Certainly not one you want to trade on in the very short term, but in the longer term, it's probably an interesting trade.
What do you think about the Euro Swiss?
Yeah, the Swiss franc is a very interesting currency. It's a very unreal situation. It's manufactured situation because of the peg. And the difficulty I have from a trading perspective is your reasons are could be spot on, but because the Swiss National Bank is sitting there, it's like saying you've got one of two ways of getting out of this room. You can go out that door and someone's going to slap you every time you go out, or you can try and get out that way. In other words, there are better ways. If you're long the Swiss franc, you know that the Swiss National Bank will come and intervene. The lower it gets, the probability of it intervening gets higher. The lower, say, Euro Swiss goes. And therefore, what is the mileage? What is your risk return? Well, we know it's been a 126.45. We know that it's been to 123.80 in the last few weeks. And you sell it here or you look for it on the downside, your risk return is totally skewed. Your arguments are valid, You may be absolutely right, but in the wrong market. So that's why it's interesting that I think you made the perfectly logical jump to then talk about dollar Swiss. But the problem with dollar Swiss, even still, is the Swiss National Bank will sit there on 120 and therefore limit your return. So your risk is skewed, your return is skewed, your probability is skewed. And what you could be talking about, the trade of the century, that from a trading point of view becomes a real pig.
Yeah.
Would have said a bitch, but I got told off yesterday because that's apparently swearing. But it becomes a very difficult proposition, and therefore, if you want to trade Euro Swiss, I'm not criticizing what you're saying. I'm talking about my difficulty here. I am one-dimensional on Euro Swiss because until I see signs that they will come out, leave the market, and let the peg go, then my risk return probability is always to the upside. Yeah. And if I want to choose a risk, I want to choose a safe haven, I'm going to be looking elsewhere like gold or something else like that. I mean, do I make sense?
Yeah, I mean, I agree with you. It's a difficult period. So people try to basically pick the bottom in Euro Swiss and basically then go for the top of the range. I'm sure there's now a bunch of retail structures which basically play that range. So basically they sell, deep upside in Euro Swiss and of course the downside to pick up more yield. Eventually these people once again will be taken out of their positions. But from a spot trading perspective, it just means you play the range. So you wait for the bottom, you wait for the stuff to rally a bit, and then you cut it down, and basically it. So it's not very sexy. Euro Swiss story for me, it's not even a real currency anymore. It's a bit of an artifact, and that's why I think if there's a trade to be done in Swiss franc, is one which will be done in the next few quarters, not anytime soon. That'll be when the U.S. Treasury
dollar Swiss, in other words,
prices.
Yeah, and then you see my point. It's interesting what you're saying about what is interesting. I've got a term I call volatility, which is what I look for. It's a combination of volatility and clarity. And the problem with what is really funny is dollar Swiss is arguably clearer than the euro, and yet because of the Swiss National Bank, it means that the volatility is likely to be more limited. And so you've got a problem on both the euro and dollar Swiss because the euro is really strange. You want to have a look at a chart. The euro is repeating itself from 127.50 in the most convoluted way you could ever imagine in technical terms in a rising wedge, which basically means that every move is going to be faded. There's a gentle drift to the upside, and every move, new high will take the stop. You'll go for the stops, up and down. Just find the stops and trade it from that perspective. But it has an outcome eventually. So what you're, in a strange way, you're saying what you probably valid in saying is that dollar Swiss is clearer, but the volatility is limited for a stronger Swiss franc because the Swiss National Bank will sit there on Euro Swiss. So I'm not being really clear on this, but I think the point I'm making is, look, if you've got a view on the euro, perhaps trade it the other way around. If you've got a view on dollar Swiss, perhaps trade it on the euro and vice versa. Use dollar Swiss as an indicator and rather than the vehicle itself because of the Swiss National Bank. I guess that's what I'm
So my point is the Swiss is not the trade now. The Swiss is the trade once we get a normalization of the interest rate cycle in the U.S. And I think that's when it's going to actually start to move the Swiss quite significantly. So for now, it's basically a range trading environment, and I don't think it's really a particularly exciting one where vol is going to be crushed. So it's not really much of an indicator. All we know is that when EM is under pressure, the Swiss franc will typically appreciate a little bit, and that's basically it. On the euro-dollar side,
option strategies on Euro Swiss. There are quite a few. You can sell.
They're all the same. All the hedge funds have always done the same. It's buy top side in Euro Swiss, and eventually they have to die these strategies. So they kind of overpay for the top side, and eventually the position kind of fades again and again. So every time they get a little bit excited, it comes out of rumors coming out of Switzerland or different places that the SNB might do something, and eventually it collapses again, and then we settle back in a range. So we've missed basically all the right triggers for Euro Swiss to move higher. We've seen a sharp normalization of the periphery versus the core. That should have led the Swiss franc to massively weaken because the Swiss franc is very expensive, and it has not happened. And so the consequence of that is you're stuck with a central bank in the ECB which has to ease more, and that typically is not good for the currency. So you've missed basically all the potential trigger for a move upside in Euro Swiss, coming out of the Eurozone, coming out of global risk normalizing. And that means we're stuck in a range in Euro Swiss and even a lower range than before in Euro Swiss for quite a while, until the dollar Swiss carry trade picks
before
up.
before we have to let you go, because I know we were a little bit pressed for time, you have to go to work. So I want to ask you, you had an interesting conversation right before we turned on the cameras about markets repeating themselves. And I know this is sort of Ed's specialty and how he based a lot of his trading. And you had some input, Sebastian, on markets repeating themselves, and I really wanted to finish that sentence that we had to interrupt.
Sure. What we had is in 2007 and in 2008, essentially the elements of a credit crisis building up, coming in from the U.S. subprime. What we're seeing over the years is essentially a repeat of that pattern. Is essentially not enough growth and too much credit risk, and it hit first the Eurozone, after the U.S., and we went through the Euro crisis, and now we're going through the transition. And the third one, which is basically the one which lagged that correction in credit, and it's basically happening in emerging markets. The reason behind it is that a lot of these currencies either, in some cases, are badly managed, but in most cases, they've seen a sharp appreciation since 2002. They've become very expensive. Parts of their economies have benefited strongly from these higher currencies, becoming more wealthy and also not as productive as they once were in relative terms. And that means these economies are less competitive. They're also stuck in many cases because they intervene so aggressively to stop some of that appreciation, with very high asset bubbles in many of these countries, which are in the process of correcting. And what we're seeing right now in the past few days, and we'll see in the coming weeks, is that continuing to percolate through the systems, the different parts of emerging markets coming under pressure, elements, if you want, of that subprime that we saw in the US, we saw then in the Eurozone, and percolate into the EM, which means that EM currencies will have a difficult time.
Sorry, I missed the last bit. The yen will have a difficult time?
Yeah, well, we're seeing that. I mean, you just have to look at the Russian rubles. You have to look at Ukraine. You see basically different currencies in emerging markets having difficult times. Brazil was the first one to go. And then what we've seen is basically a sequence of these corrections going one after the other, and even the renminbi has seen some mild pressure.
It's interesting, Seb, that you mentioned that, because I've talked about the emerging currencies moving in step. There's a sequence. The markets generally move in steps. It's one of the gifts of the market god, if you like, who's Mercury, I think, is that not everything always goes at the same time. And they are following a very similar template, one by one by one. And for me, I find really interesting is the Russian ruble seems to be behind the curve in a large extent. And what we're seeing now, I was saying to myself, why hasn't it gone? What will trigger it? And then suddenly they decide to go and invade Ukraine, or they haven't invaded Ukraine as such, but maybe they have. And it's an interesting, the fact that it's starting to catch up. And so the question then becomes, what is advanced? And you try and trade strong against, what do you think about something like buying the South African rand and selling the ruble on the sequence trade? I mean, you need proverbials to do that, don't you?
They're both extremely high betas, right? Both of them, to some extent, are trying to weaken their currency a little bit. So I'm not sure you want to do some relative trade. At least I don't do that in EM. We have colleagues who do these things. If you want to look at something that's going to blow up, just look in Africa. There are different places where the process of devaluation simply hasn't happened. And there are multiple countries which have been left with deep problems in current accounts. It's not very tradable, but if you're a corporate, you really, really want to look at it, because it's not healthy whatsoever.
We're talking about a beta. Well, I'll tell you another one then. Have a look at the HUF, because I think the HUF is behind the curve even more. Do you look at that, the Hungarian?
Less because we have EM colleagues that they actually, it's a ponytail for the rest of EMEA, so it typically gets whacked quite badly. So again, as you were talking about the ZAR, the RUB, and the HUF, it's another one of these really high betas which just literally blows up. The problem with the HUF that you have is it relies a lot on asymmetric information, that is access to locals, to people who tell you things, which can be very helpful, as we learned recently, and I'm not completely surprised with it. And makes it a bit difficult to trade a currency when you do not benefit from asymmetric information.
I actually receive sometimes that asymmetric information.
I think for some people, we might need to define asymmetric information as basically they've got it and you haven't.
Yeah. So basically, it's saying the local markets, but I guess this is a problem with a lot of emerging markets where you have a lot of local information, like in Russia, for instance, where the Russian banks, I would say, probably sits on quite a bit more information than the rest of or Europeans. But I want to thank Sebastian for taking time early in the morning for talking to us. So we did this as a pre-recording in the morning before our live show, and I think it worked quite well.
Cool. Thank you so much.
Yeah, Sebastian, thank you. And I agree, actually. Look, before you go, March 2007 dollar index is an interesting parallel. I don't believe it, but then, I've got to let the chart speak. Have a look at it. It's cool.
Okay. I'm sure we're going to have you back soon. I just, especially having you and Ed together, I think you work really well. So thanks so much.
Cheers, mate. Have a good one.
Enjoy New York.
Cheers, mate.
Cheers, bye. So we are now live. That was our little bit of TV magic here. We did the interview with Sebastian earlier on today. And I'm sitting here with Edmund and Matt again.
Nice, very. I wanted to go and change my shirt or something just to throw
Yeah,
things.
to put on a cowboy hat.
It was pre-recorded. Then
No, cowboy hat
cool.
is much better.
But no, he's a good guy.
Yeah, very good.
He's got some good insights. What is a very interesting period, a very interesting week.
Yeah.
I mean, it's Friday. What I like to do on Friday, generally anyway, and I'm using BIGtv as an excuse almost, is to look what's happened during the week and see if there are any lessons learned, and taking that, because market's always a narrative, and Sebastian is one of the best out there for giving a good narrative on what's happening. But they are a continuum. So any lessons that we've learned this week, anything we've gleaned from this week, how can we apply it to next week? And that's how we started the week, really. We had Chris on with because he's back from an extended break. Chris Brazil 61 out in Brazil, funnily enough. Who went down to Argentina for a while, and he's back into the swing of things. He's a good guy, a good short-term trader. But we were talking about how you come back from a break, how you approach the markets, how you approach a new week. And that's really some of the issues we talked about. And how you get yourself in the right mindset, how you try and approach the market without any bias, with some sort of focus, trying to avoid paralysis, or confirmation bias, and then taking it, as each step as it comes. And we had Harry involved as well about how he approaches his day, the very next day. That's one thing. That's one way of starting the week. But how do you look at the day and set yourself up in a strong position? I have a mantra that I believe in. I have lots of mantras, a lot of little rules that I seek to break or keep, preferably. And it's to trade from strength. I always want to be in a position of trading from strength.
You know what's a good point?
Trading from a position of weakness, I will stop.
And that's a good point from Chris. We can see here on his picture here, one of the things that Chris mentioned was he has to be in this position, like not necessarily in this exact office, but he has to be in front of his computer. He has to have a very specific set of data coming in for him, for his system to work. So it's exactly what you're saying, trading from strength. Yeah,
and each of us, there's a danger of coming on every day, of repeating yourself, and you feel like some things. I find that on Twitter. I don't want to repeat myself because it get boring, but some people haven't heard it the first time. Someone mentioned today that you've been in politics. Yeah, I've mentioned it loads of times, but obviously
have you been in politics?
They started following me recently and weren't aware of that past. But one thing that's quite clear to me is that what works for one person doesn't work for another.
Yeah.
You may be in terms of approaching the market from a fundamental point of view because that's your strength. You may be a technician because that's your strength. You may be a quantitative guy because that's your strength. Don't start mixing things for the sake of mixing it. Play to your strength. Keep to your strength. And if your strength comes from, like Chris, where he sleeps within the candle, as he described, every 4 hours.
That's lovely.
Then, and he needs to be in the cockpit to trade, etc., etc. Then keep to it. It's like a cricketer with a favorite bat, or a baseball player with a bat. It may not help you. It may not, in reality, help you play any better, but it's up there. And since so much of trading is up there, make sure you stay mentally strong. So find ways of making yourself mentally strong. And if that means when you go on a razzle dazzle and the night before you're not so mentally strong, or you want to go and trade when you've been on a razzle dazzle, then avoid it. Because
I don't know what razzle dazzle is, but I'm pretending that I know.
Well, I mean, and And that's what Sebastian told you. He was saying that he's a strategist. He clearly knows how to trade. You can tell that from the way he talks, and he clearly talks to traders because he talks the right language. So often I've come across guys, particularly economists, who haven't traded, who don't know the right language, can't communicate their thoughts so well for a trader or for a market. But it really comes down to what you do and try to do what's best for you and your strengths. There's a great picture that asks you trading. What's trading about? What do you do? Have you got that to hand?
Yeah, one second. It's a nice one here.
Oh, I've tweeted it before, and it's borrowed from somewhere else as well.
Yeah.
I mean, what do you reckon, Sverre? What does your mom think?
I think this is also. I think this is also almost the evolution of how you perceive yourself, or how it is to become a trader. So you start and you think it's kind of a gamble, and there's ups and downs, and then there's a lot of money, and then you say, okay, I'm gonna get educated, and you Google stuff if you do it now, and you find a lot of courses, and maybe you find a few of those con artists, and then maybe you get a little a little low, and then a little high, and then eventually you're just doing the work, like you show us every day. The work is the work, and it's hard work.
I talked about this before. I mean, preparation makes perfect. You cannot under prepare trading.
No, you really can't.
You can go through all the different types of analysis and come out with the same conclusion, if you like, but you can't. It does no harm to go through and just tick the boxes and make sure you're in a strong position. And that's the same with the day. Yeah, I mean, I quoted Marty Schwartz about his day and how he likes to have the same pattern. Again, you see what he's doing. He's making sure that there are no hiccups that are going to throw him.
Exactly.
He's going through his trades. He's got his routine. He likes to read the Wall Street Journal. He likes to do a constitutional twice and whatever. It's the same routine because he wants to be in the comfort zone. He wants to be strong. But also what he's doing is making sure that there's no mistakes. Nothing's going to phase him.
And speaking of which, we have your screen up on the other. If you want to show us a few charts, maybe. One of the things we want to do in relation to what you just said now is exactly this. We're going to go through a few specific trades, a few specific charts. So, are you ready for transferring yours?
Just give us a second. I just need to.
So I think that's a nice thing for people to have some very specific trades and charts to look at. You've been very good on a lot of these.
Well, it's been an interesting week. I mean, you're talking about the week, what's happened. Yesterday, I took my first hit on the DAX in quite a while. I've had a lucky streak on the DAX. And it's worked well, and the other day it didn't work. You could see the signs were starting to come in that things weren't quite as what they should be because, I got out break even of the last trade, and then I took a hit yesterday, which isn't obviously the best thing.
But don't you think that's important as well?
Set you up. But I mean, again, that was set up by. Have you got that chart of the Dow? Because I think that's speaking volumes. You know the infographic, the one you like.
Yeah.
If you can find that.
I love the way you explained this to me.
Sorry?
Yeah, I love the way you explained this to me. I know exactly what you're referring to. But are you not ready to share your screen?
No, I just you threw me a bit because it's nothing like scrambling about sharing my screen. I just want to, if I'm going to talk about...
But let's just talk about it then. Let's not...
specifically about, say, something like the DAX and what it's...
But let's talk about it as the end of the week here.
I'm trying to do is I'm fully aware that the... white charts don't come across well, you can't see them, so I'm trying to create a black chart, if that's all right.
I actually have a picture of the because yesterday I'm going to show you something here. So yesterday I took a screenshot of you. Can you see it here?
Yeah.
This is the chart you were referring to, I believe. So this is Ed Matz with his bullish hat. And I guess your chart here is also a little bit bullish, wouldn't you say?
No, the opposite.
Isn't it? Okay, then
No, 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 no.
this
That
is so
chart
hard
is
to read.
bearish for down to, because it's the equilibrium of the ball is on the downward slope. The view,
Is that
so
how
you
it
have to
works?
keep up, mate. I know it's hard.
No, but this is
Is for it to
complicated.
roll back down to 16,000. Yeah,
Yeah.
which we're almost there now.
Oh, then I
in the scheme
understand.
of
Like,
things.
well,
And then for
yeah.
it to put the chart back up. And then, as you see, as it gets to 16,000, it's got a slope to stop it rolling, and then it's got a brick wall.
Yeah.
That's where I'm coming from. And that
but
brick
then I
wall will
understand
eventually
this.
get it back over 16,600. And that, for me, kind of describes the entire market. For me, it's been the most important template for all the markets out there. And now, obviously, it's going to be another make or break. Again, Dow have had a pretty good run on as well, and it's I'm going to be looking in the next 24, 48 hours of. I've tweeted about this. I'm looking for a typical Friday. I mean, I couldn't hope for a better setup on a Friday. Friday, I loosely describe it as a ramp day because often it does ramp on weekend closing. Call it what you like, but typically it starts off weak and then gets the ramp. Now, given that we're so close to 16,000. Reminds me of a previous time, in fact, that we were close to 16,000 on this show. In fact, I would expect I'm looking for New York to open and try to fill not some gaps, but try to bid it back up. A typical one center opens, bids it up, fails, and then sells it off. And that's what I'm looking for in the first hour, is to get a bit of a small crash going. See if we can get down to 1670 on the Dow was the previous secondary low. I've got a target, had an outstanding target. As expressed in that infocentric of 1,595. Maybe further, maybe not as far as that. We'll see, depending on the volatility on the day. And then I will, my plan is to sell the rally and buy the drop. I've actually broken one of my rules today, and I've sold the DAX. I shouldn't. I got stopped out yesterday on a 100-point loss. Yeah, it's not really loss, I guess, because it's hedged against the 300, 400 point, 350 on average point gain on the Dow, but it's still a loss. And what I'll do is look to buy into weakness on the day and see if I can get some sort of strong close going. And again, in fact, very similar to about a month ago, at exactly the same levels on the Dow. I need a strong close to hold it through the weekend when we have political risk.
Yeah.
I need some degree of comfort.
I talked to a few brokers today.
The weekend long of stock indices or long of risk.
Yeah, I talked to a few brokers today, and people
yeah,
say that.
Can you share my screen now?
Yeah, people say that you don't want to sit this weekend, maybe necessarily because there's so many political risks. Do you agree with that?
Well, it's like anything. It's all about risk return, yeah. I mean, it's all about how you manage your risk, and therefore the likelihood of being wrong and where you put your stop, the likelihood of not being filled at your level, and therefore the likelihood. I mean, these are sums that I do all the time, and I would stress people should do as well, because it is about risk, controlling your risk. And therefore, if I don't get, there's a gap on the weekend, what type of gap could we be facing, et cetera, and therefore, do I want to take the position? So in a situation like this, I try and position in a way that gives me degree of comfort.
Yeah.
I suppose there are people out there there are some outfits that give you guaranteed stops, I mean, at some situations like this, if they do it as a matter of course, situations like this is sometimes worthwhile thinking of taking opportunity on that.
So you get a guaranteed stop over the weekend as well?
It's going to be bad, but it's still guaranteed, so your loss. And there are other ways, strategies of doing it. But if you look at this chart here on this is the DAX. It's a clean chart. I just want to show you something from the, don't know what color this is going to come out, yellow. We've got that support line coming in as the broader support. And then we have a tighter support line coming in that I want to show you. This is a cash chart, which is quite important difference to futures. One thing I would suggest people do is I'm a great believer in using as much information as I can. If you see, it hasn't actually broken yet. On a futures chart, it's broken, but on the cash chart, it hasn't. And I believe cash is king, to coin a phrase. So that's important for me for my strategy on the Dow particularly as well. There's a real risk. We've broken a head and shoulders here, Sven. I don't know how much you know about.
I
I'm
know
sure
that.
you know about head and shoulders. Everyone knows about head and shoulders. It's the first formation that everyone learns about. There you go. Head and shoulders, a neckline projects a strong drop down to closer to around 85. In Elliott wave terms, this you could count this as basically a 1, 2, 3, 4, 5 wave sequence all the way from 5,000 even, but more likely it's matching these two rallies together here. We start looking at Fibonacci retracements, you can put it down to 86 and 85.10, these previous lows, which given the head and shoulders is a clear risk. But I still haven't broken this baby out. And there's been a number of head and shoulders. There's another pattern here when you see a consolidation breaking down, failing, ramping higher. There's this price action here. There are analogies here. So it's by no means clear that this is a no-brainer to the downside. And again, I'm relying on this chart with a trend line at 88.44. What I'm therefore doing on the day is I'm annoyed and I'm broken a rule here. Never trade to make up profit. But I suspect some of my motivation here is to do that. And I'm deadly wrong to do that. And I don't trade the next day unless I can get good reasons. So why am I short? Why have I sold the DAX today above 9,000? Because it is a clear three-way rally. The sentiment's bad. New York's going to sell off. I hadn't seen my outstanding targets on the Dow, and it's the way I've justified it. It's a short-term trade with a relatively tight stop. So I'm looking for potentially 100 points back. Funny that on the DAX. Lessons learnt. Don't ever do what I'm doing. I think I've said I'm going to do something stupid today, and I kind of don't really know why one should do that. Do you remember we quoted? I don't know. You've got it to hand. Yeah. Stop sharing my screen, and I'll find it if you can.
Yeah.
A second. Let me. There's Dalai Lama. Do you remember that quote from the Dalai Lama?
Well, it's far back, so if you have it at hand, that's better, man. Maybe it's nice to end the week with a spiritual quote. So if you have it, then
yeah, maybe. Yeah, that's probably a fair point. So I mean, that's the DAX. The other thing we talked about, one of the again, it came from last week about looking for recognizing that we're facing geopolitical risk and that there are some unknowns. We've got weekends. How can you sit comfortably with positions in those type of environments? Well, one way of doing it is to find low beta trades.
yeah,
In other words, markets that aren't necessarily related to Ukraine or political or risk. The S&P or stock indices are obviously under pressure. So what trades are, you look for them, trades that could be showing some sort of volatility, being relatively clear. One thing, again, I mentioned it. One thing I'm always looking for is volatility. As a trader, I want it to move so I can make some money, but also clarity so I can put tight stops and get good risk returns. So in all that, cut a long story short, one of the low betas out there are the Aussie crosses for a number of reasons. And they were showing finally, after a long wait, they're finally showing some really interesting opportunities there. So if you want to show my screen again, I can show you what go just
I
as a
suggest that
refresher. This is kind of like a recap.
we
of
wrap
some of
up the
fun
show
stuff
today
talking
with
a
the
week.
Aussie crosses, and I think that's a good. Maybe it's a little bit of a, let's say it's potentially a transfer where you've been very focused on the DAX, and I sense that you're shifting focus a little bit towards the Aussie. Am I correct?
No, not quite. Yes, I look at a lot of markets. Basically, I'm looking for volatility and clarity. I've looked at a lot of markets over a long period of time because I don't believe jumping in markets I don't know anything about. They might have some real shocks there that I'm not aware of. We talked before with Sebastian about asymmetric information. If you haven't got the information at all, then it's even worse than asymmetric in some ways. So I'm looking to trade markets I know. Now, I've fortunately been around enough to have traded lots of markets and have a good understanding of some of them.
But
And
I
so I can
suggest
switch.
I
When
suggest that
when
you
I
can
go cold on the
show
market,
you
and
can
I've
show this
taken
trade.
2 trades that haven't worked out on the DAX, broken even and lost, then I'm going to start looking elsewhere because I know I'm cold enough. I'm looking for volatility and clarity and also some signs that I'm doing well. So, I'm going to be shifting my stock indices risk to the Dow because I'm nailing the Dow. I'm short from effectively above 16,400, so that's good. And now I'm looking for, because I want to carry a degree of risk, but I don't want all my eggs in one basket, correlated risk. Yeah. So I'm looking at other markets that I can trade that are volatile, that can give me a good return without having the same type of risk.
Yeah, I
And
understand.
this is one of them. Yeah. I'm looking for a 10% drop on all things Australian, or rally in all things Australian, but drop in Euro Aussie. And now the chance, it's again head and shoulders. Yeah, funny that I tweeted about the DAX. If you notice, in the last 12 hours, the DAX has been very tight to the euro, which is not that common. If you go before 24 hours, like 2 or 3 days, it looks quite different. But in the last 24 hours, it's been holding hands with it. So we might be moving. It's worth highlighting because we might be moving in a situation where something like the DAX is moving with the euro.
Yeah.
Now, given the euro is in a massive rising wedge that will finish at some point and get buried at some point, then it's saying, then watch out for the DAX.
But that's
Watch
really
as a
interesting.
clue
I
to the
think
euro.
I think
Euro provides an interesting window.
I
So
think
that
we
correlation
should try
doesn't
to
exist
wrap
all
it
the
up.
time, but it's there at the moment.
We should try to wrap up the show, the recording, and we're going to continue with the live stream for a little
Okay,
bit longer.
Okay,
And
cool. Let me then just a couple of trades I'm still looking at. I'm still excited by sterling Aussie. Again, I was saying the clarity was in the euro and lesser in the sterling Aussie, but now the clarity is more in sterling Aussie and
yeah,
the return. I think that's my focus in terms of markets I like, because I'm bearish on sterling as an animal. Still repeating the same type of price action as before. Can you show my screen? Yeah, same price action as before. It's still got a chance to come back and mess around a bit before we start getting mileage below 181. I'm going to be hitting bids for a below 181 because I think there's real potential on the downside. In other words, I'm going to increase my position.
so
And there's the Kiwi. One of the key things I was waiting for on the Kiwi was break to new highs. I think it's still got scope to go up here, but the reason why I wanted that was to fill the stop so I could enter this trade. Notice how I use other markets as a guide to what I want to do, and how I
yeah.
leg in some markets as well.
But let's wrap up the recording now, and let's continue on with
let me just
trades
finish
in
then
the
I'll
pre-show.
finish by saying this is a market that is a here and now trade. I'm long. Disclaimers: don't risk anything you can't afford to lose, and if you take a risk, then it's on your head. Take the responsibility for it. This is similar price action to that. It's a right here and now trade that I've got myself. One reason is because this baby Aussie gold is still kicking, and I think that's basically describes it. I'm looking to fade risk into the next 24 hours for a window to recover. Remains to be seen if we've got that recovery. I want to see it on the close, and I'm trading some low beta markets in order to avoid that political risk into the weekend. But hey, once we come in on Monday, it's a new week, and that will give us plenty of other opportunities, no doubt.
Yeah, and you mentioned the word weekend, and in 32 minutes, I'm getting a new sofa here in the office, and that's like the separation point from the week to the weekend. I'm gonna test it out and sleep on it immediately. So, but I want to thank you for another great week, and
Yeah,
I
it's
think
funny though, because
I like this tighter
people
format.
ask me. Have always asked me, how do you manage? Because one of the reasons I'm a kind of a family guy. You can tell that. And I used to work in the city. I wanted to spend more time with my family. I was working all sorts of strange hours, working through the night, sometimes trading, because that's the type of thing I do. And this wasn't for me. I needed to be more with my family. So one reason I moved out. But people ask, how can you trade from home? Because effectively, it doesn't matter if it's a separate building, whether it's a coach house or now I have the entire ground floor of a 4-story house as an office. A bit indulgent, but what the heck. And how do I mix pleasure with work and pleasure? How do I do that? And you do that by being disciplined. You don't have sofas in the office.
We have people in the office all the time. So,
Well, all right, have a sofa
but Ed,
so they can sit down.
we're
They
going to
don't have a
continue
sofa,
on with the
babe.
show, but we're calling it weekend for the recording. If you're watching this on YouTube or listening to the podcast, you can subscribe to the podcast on iTunes. Just search for Fill or Kill. If you want to find us on YouTube, our channel is called Fill or Kill Show. So youtube.com/Fill or Kill Show. And we are ending our week here, but we're continuing on with the live show. You can catch the live show on www.bigtv.io. We also have a chat room. We have a Twitter account. We have a Pinterest account even. And we're going to continue on Monday. And it's going to become much more like this. About a half an hour show. Today was 45 minutes, but that's kind of the format we're shooting for. So thank you for sticking along with us another week, and thank you, Ed.
You're welcome. Have a great weekend and good luck.